Hey guys, it's Justin Goodbread with Financially Simple. So here's a question for you. Should you invest in individual equities? Individuals typically under the age of 30 are really excited right now about individual stock. I've talked to 3 different people that I've known for many years. They're like, man, I'm making a killing in the stock market. I'm buying and selling stocks on a daily basis, and I made, one guy said, I took $40,000 and it's currently worth $110,000. I mean, man, that's awesome. That's great. Over what period of time? Well, it's been about 3 years. I said, okay, that's really good, really good. Yeah, so where are you doing this at? Well, what do you mean? I said, well, what type of account are you using? Well, I've got a retirement account, I've got a Roth, but I'm not using that. I'm using just individual cash. Forget the taxation on the issue. He really didn't make, even though his portfolio grew, he paid short-term capital gains on the on the difference between his original investment and the current value because he was day trading. So in his case, 25-30% of the earnings were gone. So he ended up having to pay that out of his income. He's like, yeah, I couldn't figure out how to do that. A wealth planner could have showed him how to set it up. All right, so that's one conversation I've had. The second guy said, man, I'm making a ton of money in online currencies right now. Yeah, Bitcoin, I've heard of it. I know it very well. I watch it. Yeah, I'm making a ton of money there. Now let's flip the pendulum. Now whenever I see people in their 40s and 50s, or their late 30s, early 40s, they're like, man, I am never, ever, ever buying an individual stock again. I had my butt chewed. I mean, I just got worn out. What happens is, in that avenue, between the early age of 20s, whenever you're in a bull market, which is what we've had this last little bit, and now your 30s or 40s, you've already gone through a good bear market typically. I can remember a young investor back in the day. He was buying some energy stocks, and he took about a $10,000 portfolio and grew it to like 60 grand. But he didn't protect himself, and he didn't use portfolio theory, and he ended up losing most of that 60 grand back down to like 8,000 bucks. And he's like, I will never buy an individual stock again. I'm like, brother, it's not the individual stock. It's that you didn't use investment matrix. You didn't use good investing sense. Now let's fast forward. I'm seeing a phenomenon right now with individuals who are in their 50s, late 50s, say, I want to buy individual stocks now. We're on a very, very strong bull market. The bear is coming. I don't know when, but he's coming. And the investor sentiment, in other words, how investors feel, is, well, the markets are really good. I really feel endowed right now, so I want to go out and buy some individual equities. Yeah, besides, all my buddies are doing it. They're making like 30% return. Like, possibly. I tell you that to say, should you buy individual stock? You know, I can tell you, I am not a fan of day trading. I just don't believe that in the long run it accomplishes what people are trying to achieve for the long run. Now, it's fun. Trust me, it's like going to Vegas. It is fun. But to me, it just doesn't make sense. I have friends. I have a lot of financial advisor friends across this country. And we compare off record. We look at portfolios that we manage and we say, hey, look, obviously you're not sharing client names or anything like that, but like, look, I've got this portfolio. It's $300,000 that I'm managing for somebody, and I'm using, I like to use passive investments versus stocks. But he's like, man, I'm day trading this account and I'm up X number percent. I'm like, really? Over what time period? Oh, in 6 months. Okay, how'd you do over the last 2 years? Well, let's look at that. So he'll look at the percent return on his screen, and we're usually on the phone we do this, and I'll look at my percent return, and it's the exact same thing. Man, all this work I'm doing, you're yielding the exact same return on a very similar portfolio. I'm like, yeah, man, why is that? So there's a little thing called modern portfolio theory. I believe the markets are efficient. That's my belief. I don't believe that you can outperform individuals who have potentially inside information, who are trading in nanoseconds. I don't believe the average Joe, whether it be an individual investor, a DIY guy, or a broker, I don't believe they can outperform the markets over long term. If that were possible, then the mutual fund, the active mutual fund managers would be able to do that, because they have research teams. I mean, highly educated people that track this, and many times they don't outperform the markets. So, should you buy individual stocks? If you work with me, I'm going to tell you no. I don't do it. I'm not going to do it. I'm not a day trader. I don't believe it works. There's too much data out there which proves that if you just build a good, balanced portfolio that's blended to your particular risk tolerance, now this is the key, rebalance it tactically. If you can do that, you're going to get a good market return, and you're going to get a return that you need to meet your goals. Then you don't have to worry about when the market's up 20% or down 20%. You don't have to worry about it. That's food for thought, just some things I'm seeing right now in the industry. And so, hey guys, Justin here. I'm signing off. Y'all have a good day.